Okay. So now we'll see general auditing principles and auditors' responsibilities. ஸோ இந்த எஃபர்ட் வந்து நம்ம ஏன் எடுக்கிறோம் அப்படின்னா ஆடிட்டிங் பொறுத்தளவில் எல்லாருக்குமே என்ன ப்ராப்ளம்னா படிக்கும் போது சம்டைம்ஸ் புரிய மாட்டேங்குது. அதுக்கப்புறம் ஒரு பாயிண்ட்ல யாராவது சொல்லி கொடுத்து நமக்கு புரிஞ்சிடும். புரிஞ்சதுக்கப்புறம் நம்ம படிச்சுட்டே இருப்போம். ஆனால் அப்போவும் என்ன ஆகும்னா ஒரு பென் எடுத்து ஒரு பேப்பர் எடுத்து ஆன்சர் எழுதலாம்னு உட்காரும் போது நமக்கு அந்த கீவேர்ட்ஸ் வந்து வரவே வராது. இது எல்லாருக்குமே இருக்க ப்ராப்ளம். இது ஏன் அப்படின்னா ஆடிட்டோட டெர்மினாலஜிஸ் ரொம்ப டிஃப்ரெண்ட் மற்ற பேப்பர்ஸை விட. ப்ளஸ் நமக்கு வந்து அதில் போதுமான அளவு பரிச்சயம் இல்லை. வி ஆர் நாட் கம்ஃபர்டபுள் வித் தீஸ் வேர்ட்ஸ். இந்த வேர்ட்ஸோட நம்ம எவ்வளோ நேரம் ட்ராவல் பண்ணுறோமோ அந்த அளவுக்கு தான் இந்த வேர்ட்ஸ் எல்லாம் வந்து நமக்கு கை கொடுக்கும். ஓகேவா? இப்போ நார்மலாக நம்ம பேசுகிற டெய்லி நம்ம பேசுகிற வார்த்தைகளை கூட அதை இன்னும் கொஞ்சம் நம்ம என்ரிச் பண்ணணும்னா சாதாரணமாக டெய்லி யூஸ்க்கு பேசுகிற வேர்ட்ஸை கூட என்ரிச் பண்ணுறதுக்கு நம்மளே நிறைய வொக்காபுலரி இம்ப்ரூவ் பண்ண வேண்டியதாக இருக்குது. அப்படின்னும் போது ஒரு என்டையர்லி நியூ சப்ஜெக்ட், அதுவும் சிஏ ஃபைனல் லெவலில் நம்ம வந்து படிக்கணும் எழுதணும் அப்படின்னு சொல்லும் போது யூ கான் டூ வித் த சேம் வொக்காபுலரி தட் யூ பீன் யூஸிங் இன் சிஏ இன்டர்மீடியட் லெவல்லையோ இல்லை நார்மலாக உங்களுக்கு இங்கிலீஷ் தெரியும் அப்படிங்கிறத வச்சு இதை நம்மளால கிராக் பண்ண முடியாது. ஸோ நான் என்ன நினச்சேன்னா ஐம் பிளானிங் டு டேக் சிஏ ஃபைனல் பேப்பர் கம்ப்ளீட்டாகவே. அதுக்கு முன்னாடி ஐ தாட் அஸ் ஒரு ட்ரெய்லர் மாதிரின்னு வச்சுக்கோங்களேன். ஒவ்வொரு சாப்டரையும் ஒரு பாட்காஸ்ட் மாதிரி பண்ணலாம். இந்த பாட்காஸ்ட்டில் நான் வந்து எதுவுமே எக்ஸ்பிளைன் பண்ண போகிறதே கிடையாது. ஜஸ்ட்டு சாப்டர் நம்பர் 2 ஒரு 60 பேஜ் இல்லை 70 பேஜ் இருக்குன்னா அந்த ஃபுல் டெக்ஸ்ட்டையுமே சாப்டர் நம்பர் 2ஓட ஃபுல் டெக்ஸ்ட்டையும் ஐ தாட் ஐ வில் ரீட் இட் டு யூ. ஸோ உங்களுக்கு எப்போ டைம் கிடைச்சாலுமே நீங்கள் என்ன பண்ணலாம் அப்படின்னா இந்த ஆடியோவை போட்டு கேட்கலாம். ஓகேவா? இல்லை நான் புக்கை பார்த்து படிக்கணும் அப்படின்னா நீங்கள் அப்படியே வீடியோவையும் சேர்த்து பார்த்துக்கலாம். ஸோ இது ப்ராபப்ளி ஒரு 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 பார்ட் ஒரு பார்ட்டாக வந்து ஒரு 60 பேஜஸை படித்து முடிக்கணும்னா கண்டிப்பாக இட் வில் டேக் 1.5 hours or 2 hours. அந்த ஹவர்ஸை வந்து நம்ம ஸ்பெண்ட் பண்ணுறது எதுக்காகனா நீங்கள் கவனிக்கலைங்கிறது செகண்டரி. பட் அட்லீஸ்ட் அந்த வார்த்தைகள் உங்களுக்கு வந்து டெய்லி உங்கள் காதில் விழுந்துக்கிட்டே இருக்குது அப்படின்னு சொன்னாதான் நீங்கள் சாதாரணமாக ஏதாவது எழுதும் போது கூட ஓகே அப்டெய்னிங் த ஆடிட் எவிடன்ஸ், இவாலுவேட்டட், ஓகேவா, அந்த மாதிரி வேர்ட்ஸு உங்களுக்கு வரணும்னா சிஏ இன்டர்மீடியட் லெவலில் நம்ம கொஞ்சம் ப்ராக்டிஸ் பண்ணோம் இல்லையா? ஸோ சிஏ ஃபைனல் லெவலில் இன்னுமே உங்களுக்கு ஜாஸ்தியான இம்ப்ரவைசேஷன்ஸ் தேவைப்படுது. அதனால வி ஹவ் பிளான்ட் திஸ் பாட்காஸ்ட். ஸோ லெட்ஸ் கெட் இன் டு சாப்டர் நம்பர் 2. Chapter number 2, General Auditing Principles and Auditors' Responsibilities, Learning Outcomes. After studying this chapter, you'll be able to understand the meaning of fraud and its characteristics, fraud risk factors with examples. Number 2, gain knowledge about SA 240, the auditor's responsibilities relating to fraud in an audit of financial statements. Number 3, gain knowledge about SA 250, consideration of laws and regulations in an audit of financial statements. Learn about significance of communication with those charged with governance and gain knowledge about SA 260, communication with TCWG. Next one, gain knowledge about SA 299, joint audit of financial statements. Next one, gain knowledge about SA 402, audit considerations relating to an entity using a service organization. CA Bijoy is auditor of a listed company since last 3 years. Of late, the company is in news in financial circles for all the wrong reasons. There have been allegations of flouting of securities contracts regulations rules by clandestinely controlling more than required percentage of shares than mandated in rules. Besides, the said company has been accused of violating other provisions of securities laws. There have also been allegations of manipulating the share prices, of artificially keeping the share prices high, and failure to disclose all related party transactions. The company is a highly leveraged one. However, there has been no default and company has kept its commitments. SEBI is also seized of the matter on its own. Ever since the above allegations were hurled through media, audit of the company is in a fix. What do such allegations reflect? How he should proceed in auditing? How he should proceed in audit of the ensuing year. The regulatory report would take time and audit has to be completed within timelines. Audit of last 2 years were concluded in accordance with the essay and no wrongdoings were noticed and unmodified opinion was expressed in audit reports. However, given the current scenario, there seemed to be a heightened level of audit risk. It would be foolish of him to not take notice of such developments. Allegations of violations of securities laws, manipulating the share prices, and failure to disclose all related party transactions could be fraud risk factors. While fraud risk factors may not necessarily indicate the existence of fraud, they have often been present in circumstances where frauds have occurred. Hence, there are increased risk of material misstatement due to fraud. Due to assessment of increased risk of material misstatement due to fraud, audit procedures need to be designed and performed accordingly and appropriately. Besides above, suspected non-compliance with laws and regulations may have material effect on financial statements. It could involve hefty penalties and other issues if management is not forthcoming in providing information relating to compliance with laws and regulations. Does he need to obtain legal advice? Whether it would also lead to any impact on his opinion? Such questions were staring at him in the face in current year of his tenure. If he suspects involving management or involvement of the management in the fraud, should he communicate these suspicions to audit committee and discuss with them the nature, timing, and extent of audit procedures necessary to complete the audit? So this is the trailer that they have given in the box. Usually for C intermediate, they used to use the word Samir. Here it's Bijoy, that's all. So number one, the first heading here, we actually enter into the actual, chapter. So heading number one, which is general auditing principles and auditors' responsibilities. Here they're just giving you an introduction of all the essays that we're going to deal here. So it goes like this. Essay 200 establishes the independent auditor's overall responsibilities when conducting an audit of financial statements in accordance with essays. Audit has to be planned and performed with professional skepticism, recognizing that circumstances may exist that cause the financial statements to be materially misstated. Misstatements can arise from frauds or errors. Essay 240 deals with the auditor's responsibilities relating to fraud in an audit of financial statements. The auditor has to remain alert throughout the audit, recognizing the possibility that material misstatement due to fraud could exist. Entities are subject to various laws and regulations. Non-compliance with laws and regulations may result in fines, litigation, or other consequences for the entity, leading to material effect on financial statements. Essay 250 deals with auditors' responsibilities in this regard while performing an audit of financial statements. Since many laws and regulations affect the entities, auditor has to remain alert to the possibility of non-compliance with laws and regulations. Communication with those charged with governance on a timely basis during audit serves many useful purposes, and SC 260 deals with auditors' responsibilities in this regard. AC 299 details special consideration relating to responsibilities of auditors in a joint audit. It is very common for the user entities these days to outsource the activities from a third-party service organization. SA 402 dwells upon the user auditor's responsibility to obtain sufficient appropriate audit evidence in this respect. SA 240, the auditor's responsibility relating to fraud in an audit of financial statements. So now we're going to talk about SA 240. We are officially entering into SA 240. So for the next 20-25 minutes, we will be studying only about SA 240. And please listen very carefully. What are the important keywords that comes in SA 240? So this audio practice will help you a lot in listening to the most important keywords and listening to the vocabulary of auditing that will help you in building your vocabulary while you write your examination. All the best. Let's listen to SA 240, the auditor's responsibilities relating to fraud in an audit of financial statements. SA 240 deals with the auditor's responsibilities relating to fraud in an audit of financial statements. Its requirements assist the auditor in identifying and assessing the risk of material misstatement due to fraud and in designing the procedures to detect such misstatement. Objectives of the auditor in accordance with SA 240. The objectives of the auditor in accordance with SA 240 are to identify and assess the risk of material misstatement in the financial statements due to fraud, to obtain sufficient appropriate audit evidence about the assessed risk of material misstatement due to fraud through designing and implementing appropriate responses, and to respond appropriately to identified or suspected fraud. Meaning of fraud and its characteristics. Fraud is an intentional act by one or more individuals among the management, those charged with governance, employees, or third parties, involving the use of deception to obtain an unjust or illegal advantage. Misstatements in the financial statements can arise from either fraud or error. The distinguishing factor between fraud and error is whether the underlying action that results in the misstatement of the financial statement is intentional or unintentional. Although fraud is a broad legal concept, auditor is concerned with fraud that causes a material misstatement of the financial statements. Fraud due to misstatements resulting from fraudulent financial reporting or misappropriation of assets involves incentive or pressure to commit fraud, a perceived opportunity to do so, and some rationalization of the act. I repeat the 3 lines that I'm reading now because this is going to form the very basis of the entire SA 240. So each and every word here given is very important, and each and every word will have like paragraphs of explanation. So let's read these 3 lines for at least 5 times, okay? Fraud, whether due to misstatements resulting from fraudulent financial reporting or misappropriation of assets, involves incentive or pressure to commit fraud, a perceived opportunity to do so, and some rationalization of the act. I repeat, fraud, whether due to misstatements resulting from fraudulent financial reporting or misappropriation of assets, involves incentive or pressure to commit fraud, a perceived opportunity to do so, and some rationalization of that. I repeat, fraud, whether due to misstatements resulting from fraudulent financial reporting or misappropriation of assets, involves incentive or pressure to commit fraud, a perceived opportunity to do so, and some rationalization of that. I repeat, fraud, whether due to misstatements resulting from fraudulent financial reporting or misappropriation of assets, involves incentive or pressure to commit fraud, a perceived opportunity to do so, and rationalization of the act. Incentive or pressure to commit the fraudulent financial reporting may exist when the management is under pressure from sources outside or inside the entity to achieve an expected and perhaps unrealistic earnings target or financial outcome, particularly since the consequences to the management for failing to meet the financial goals can be significant. Similarly, individuals may have an incentive to misappropriate assets, for example, because the individuals are living beyond their means. A perceived opportunity to commit fraud may exist when an individual believes internal control can be overridden, for example, because the individual is in a position of trust or has the knowledge of specific deficiencies in the internal control. Individuals may be able to rationalize committing a fraudulent act. Some individuals possess an attitude, character, or a set of ethical values that allow them knowingly and intentionally to commit a dishonest act. However, even otherwise honest individuals can commit fraud in an environment that poses sufficient pressure on them. Now, how fraudulent financial reporting may be caused by entities. Fraudulent financial reporting involves intentional misstatements, including omissions of amounts or disclosures in financial statements to deceive the financial statement users. It can be caused by the efforts of management to manage the earnings in order to deceive the financial statement users by influencing their perceptions as to the entity's performance and profitability. Such earnings management may start out with small actions or inappropriate adjustment of assumptions and changes in judgments by the management. Pressures and incentives may lead these actions to increase to the extent that they result in fraudulent financial reporting. Such a situation could occur when, due to pressures to meet the market expectations or a desire to maximize the compensation based on performance, management intentionally takes positions that lead to fraudulent financial reporting by materially misstating the financial statements. In some entities, management may be motivated to reduce the earnings by a material amount to minimize the tax or to inflate the earnings to secure the bank financing. Fraudulent financial reporting may be accomplished by the following three things. Number one, manipulation, falsification, including forgery, or alteration of accounting records or supporting documentation from which the financial statements are prepared. Number two, misrepresentation in or intentional omission from the financial statements of events, transactions, or other significant information. Number three, intentional misapplication of accounting principles and policies relating to amounts, classification, the manner of presentation, or disclosure. Now, fraudulent financial reporting often involves the management override of controls that otherwise may appear to be operating effectively. I repeat, fraudulent financial reporting often involves management override of controls that otherwise may appear to be operating effectively. Fraud can be committed by management overriding the controls using such techniques as recording the fictitious journal entries, particularly close to the end of an accounting period, to manipulate the operating results or achieve other objectives. Number two, it's inappropriately adjusting the assumptions and changing the judgments used to estimate the account balances. Number three, omitting, advancing, or delaying the recognition in the financial statements of events and transactions that have occurred during the reporting period. Number four, concealing or not disclosing facts that could affect the amounts recorded in the financial statements. Number five, engaging in complex transactions that are structured to misrepresent the financial position or financial performance of the entity. Number six, altering the records and terms related to significant and unusual transactions. Next one, how misappropriation of assets may be accomplished by entities. Misappropriation of assets involves the theft of an entity's assets and is often perpetrated by employees in relatively small and immaterial amounts. However, it can also involve management who are usually more able to disguise or conceal misappropriations in ways that are difficult to detect. Misappropriation of assets can be accomplished in a variety of ways, including embezzling the receipts, for example, misappropriating the collections on accounts receivable, or diverting the receipts in respect of return of accounts to personal bank accounts, stealing the physical assets or intellectual property, for example, stealing the inventory for personal use or for sale, or stealing of the scrap resale, colluding with the competitor by disclosing the technological data in return for a payment, and causing an entity to pay for goods and services not received, for example, payments to fictitious vendors, kickbacks paid by the vendors to the entity's purchasing agents in return for inflating prices, payments to the fictitious employees, using an entity's assets for personal use, for example, using the entity's assets as collateral for a personal loan or a loan to a related party. Misappropriation of assets is often accompanied by false or misleading records or documents in order to conceal the fact that the assets are missing or have been pledged without proper authorization. Although the auditor may suspect or in rare cases identify the occurrence of fraud, the auditor does not make legal determinations of whether fraud has actually occurred. Whose primary responsibility is it to prevent and detect fraud? Of course, அது யாரோட பிரச்சனை? ஃப்ராட் இருக்கா இல்லைன்னு கண்டுபிடிக்க வேண்டியது பிரைமரி ரெஸ்பான்சிபிலிட்டி மேனேஜ்மெண்ட்டுக்கு தான். ஆடிட்டர் வந்து அது ஏன் பண்ணுறாருன்னா ட்ரூ அண்ட் ஃபேர் வியூ ரிஃப்ளெக்ட் பண்ணதா இல்லையான்னு பார்த்துட்டு ஜஸ்ட் வந்து ஒரு ரிப்போர்ட் கொடுக்கறதுக்காக அவர் பண்ணுறாரு. பட் பிரைமரி ரெஸ்பான்சிபிலிட்டி ஃபார் த ப்ரிவென்ஷன் அண்ட் டிடெக்ஷன் ஆஃப் ஃப்ராட் ரெஸ்ட் வித் போத் TCWG and the management. அவ்வளோதான். So it is important that the management with the oversight of those charged with governance place a strong emphasis on fraud prevention, which may reduce the opportunities for fraud to take place, and the fraud deterrence, which could persuade the individuals not to commit fraud because of the likelihood of detection and punishment. This involves a commitment to creating a culture of honesty and ethical behavior, which can be reinforced by an active oversight by those charged with governance. Responsibilities of the auditor. An auditor conducting an audit in accordance with essays is responsible for obtaining reasonable assurance that the statements taken as a whole are free from material misstatements, whether caused by fraud or error. Owing to the inherent limitations of an audit, there is an unavoidable risk that some material misstatements of the financial statements may not be detected even though the audit is properly planned and performed in accordance with the standards on auditing. The potential effects of inherent limitations are particularly significant in the case of misstatement resulting from fraud. The risk of not detecting a material misstatement resulting from fraud is higher than the risk of not detecting one resulting from error. This is because fraud may involve sophisticated and carefully organized schemes designed to conceal it, such as forgery, deliberate failure to record the transactions, or intentional misrepresentations being made to the auditor. Such attempts at concealment may be even more difficult to detect when accompanied by collusion. Collusion may cause the auditor to believe that audit evidence is persuasive when it is, in fact, false. The auditor's ability to detect a fraud depends on various factors such as the skillfulness of the perpetrator, the frequency and the extent of manipulation, the degree of collusion involved, the relative size of individual amounts manipulated, and the seniority of those individuals who are involved in the fraud. While the auditor may be able to identify potential opportunities for fraud to be perpetrated, it is difficult for the auditor to determine whether the misstatements in judgment areas such as the accounting estimates are caused by fraud or error. That's very difficult for the auditor to judge. Furthermore, the risk of the auditor not detecting a material misstatement resulting from management fraud is greater than employee fraud because management is frequently in a position to directly or indirectly manipulate the accounting records, present the fraudulent financial information, or override the internal control procedures designed to prevent similar frauds by other employees. So when obtaining the reasonable assurance, the auditor is responsible for maintaining professional skepticism throughout the audit, considering the potential for the management override of controls and recognizing the fact that audit procedures that are effective for detecting error may not be effective in detecting the fraud. Now, coming to the next question, what are the fraud risk factors? Fraud risk factors are events and conditions that indicate an incentive or pressure to commit fraud or provide an opportunity to commit fraud. For example, the need to meet expectations of third parties to obtain additional equity financing may create a pressure to commit fraud. The granting of significant bonuses, if unrealistic profit targets are met, may create an incentive to commit fraud. And a control environment that is not effective may create an opportunity to commit fraud. Examples of fraud risk factors. Following are the examples of fraud risk factors relating to misstatements arising from fraudulent financial reporting and from misappropriation of assets, respectively. Fraud risk factors relating to misstatements arising from the fraudulent financial reporting. So now we're going to deal only with the fraud risk factors. Okay, you just have to remember we are talking about the examples of fraud risk factors arising from fraudulent financial reporting. Okay, so now the following examples are the fraud risk factors arising from FRF, that is fraudulent financial reporting, FFR. Number one, incentives or pressures. Financial stability or profitability is threatened by economic, industry, or entity operating conditions such as high degree of competition or market saturation, accompanied by declining margins, and high vulnerability to rapid changes such as changes in technology, product obsolescence, or interest rates, significant declines in customer demand, and increasing business failure in either the industry or overall economy. Operating losses making the threat of bankruptcy, foreclosure, or hostile takeover imminent. Recurring negative cash flows from operations or an inability to generate cash flows from operations while reporting earnings and earnings growth. Rapid growth or unusual profitability, especially compared, rapid growth or unusual profitability, especially compared to that of other companies in the same industry. New accounting, statutory or regulatory requirements. Next one, excessive pressure exists for the management to meet the requirements or expectations of third parties due to the following: profitability or trend level expectations of investment analysts, institutional investors, significant creditors, or other external parties, particularly expectations that are unduly aggressive or unrealistic, including expectations created by management in, for example, overly optimistic press release or annual report messages. Need to obtain additional debt or equity financing to stay competitive, including financing of major research and development or capital expenditure. Marginal ability to meet exchange listing requirements or debt repayment or other debt covenant requirements. Perceived or real adverse effects of reporting poor financial results on significant pending transactions such as business combinations or contract awards. Information available indicates that the personal financial situation of management or those charged with governance is threatened by the entity's financial performance arising from the following. I repeat, information available indicates that the personal financial situation of the management or those charged with governance is threatened by the entity's financial performance arising from the following: significant financial interest in entity, significant portions of their compensation, for example, bonuses, stock options, and earnout arrangements, being contingent upon achieving aggressive targets for stock price, operating financial position, or cash flow. Personal guarantees of debts of the entity. There is excessive pressure on management or operating personnel to meet financial targets established by those charged with governance, including sales or profitability incentive goals. Next one, opportunities. The nature of the industry or the entity's operations provides opportunities to engage in fraudulent financial reporting that can arise from the following: significant related party transactions not in the ordinary course of business or with related entities, not audited or audited by another firm. A strong financial presence or ability to dominate a certain industry. A strong financial presence or ability to dominate a certain industry sector that allows the entity to dictate terms or conditions to suppliers or customers that may result in inappropriate or non-arm's length transactions. Assets, liabilities, revenues, or expenses based on significant estimates that involve subjective judgments or uncertainties that are difficult to corroborate. Significant, unusual, or highly complex transactions, especially those close to period end that pose difficult substance over form questions. Significant operations located or conducted across international borders in jurisdictions where differing business environments and cultures exist. Use of business intermediaries for which there appears to be no clear business justification. Significant bank accounts or subsidiary or branch operations in tax haven jurisdictions for which there appears to be no clear business justification. The monitoring of management is not effective as a result of the following: domination of management by a single person or small group in a non-owner managed business without compensating controls. Oversight by those charged with governance over the FR, that is financial reporting process, and internal control is not effective. There is a complex or unstable organization structure as evidenced by the following: difficulty in determining the organization or individuals that have controlling interest in the entity. Overly complex organization structure involving unusual legal entities or managerial lines of authority. High turnover of senior management, legal counsel, or those charged with governance. Internal control components are deficient as a result of the following: inadequate monitoring of controls, including automated controls and controls over interim financial reporting, where external reporting is required. High turnover rates or employment of accounting, internal audit, or information technology staff that are not effective. High turnover rates of employment of accounting, internal audit, or IT staff that are not effective. Accounting and information systems that are not effective, including situations involving significant deficiencies in internal control. Next one, attitudes and rationalization. Communication, implementation, support, or enforcement of the entity's values or ethical standards by the management, or the communication of inappropriate values or ethical standards that are not effective. Non-financial management's excessive participation in or preoccupation with the selection of accounting policies or the determination of significant estimates. Known history of violation of securities laws or other laws or regulations or claims against the entity, its senior management, or those charged with governance, alleging the fraud or violations of laws and regulations. Excessive interest by the management. I repeat, excessive interest by the management in maintaining or increasing the entity's stock price or earnings trend. Next one, the practice by the management of committing to analysts, creditors, and third parties to achieve aggressive or unrealistic forecast. Management failing to remedy known significant deficiencies in internal control on a timely basis. An interest by the management in employing inappropriate means to minimize the reported earnings for tax motivated reasons. Low morale among the senior management. The owner manager makes no distinction between personal and business transactions. Dispute between shareholders in a closely held entity. Recurring attempts by the management to justify marginal or inappropriate accounting on the basis of materiality. The relationship between management and the current or predecessor auditor is strained as exhibited by the following: frequent disputes with the current or predecessor auditor on accounting, auditing, and reporting matters. Unreasonable demands on the auditor, such as unrealistic time constraints regarding the completion of the audit, or the issuance of audit report. Restrictions on the auditor that inappropriately limit access to people or information or the ability to communicate effectively with those charged with governance. Domineering management behavior in dealing with the auditor, especially involving attempts to influence the scope of the auditor's work or the selection or continuance of personnel assigned to or consulted on the audit engagement. Risk factors relating to misstatements arising from misappropriation of assets. The following are examples of risk factors relating to misstatements arising from misappropriation of assets. Incentives or pressures. Personal financial obligation may create pressure on the management or employees with access to cash or other assets susceptible to theft to misappropriate those assets. Adverse relationship between the entity and employees with access to cash or other assets susceptible to theft may motivate these employees to misappropriate those assets. For example, adverse relationships may be created by the following: known or anticipated future employee layoff, recent or anticipated changes to employee compensation or benefit plans, promotions, compensation, or other rewards inconsistent with expectations. Opportunities. Certain characteristics or circumstances may increase the susceptibility of assets to misappropriation. For example, opportunities to misappropriate assets increase when there are the following: large amount of cash on hand, inventory items that are small in size, inventory items that are high value or in high demand, easily convertible assets such as bearer bonds, diamonds or computer chips, fixed assets which are small in size, marketable or lacking observable identification of ownership. Inadequate internal control over assets may increase the susceptibility of misappropriation of those assets. For example, misappropriation of assets may occur because there is this following: inadequate segregation of duties or independent checks, inadequate oversight of senior management expenditures such as travel and other reimbursements, inadequate management oversight of employees responsible for assets, for example, inadequate supervision or monitoring of remote locations, inadequate job applicant screening of employees with access to assets, inadequate record keeping with respect to assets, inadequate system of authorization and approval of transactions, for example, in purchasing, inadequate physical safeguards over cash, investments, inventory or fixed assets, lack of complete and timely reconciliation of assets, lack of timely and appropriate documentation of transactions, for example, credits for merchandise returns, lack of mandatory vacations for employees performing key control functions, inadequate management understanding of information technology which enables IT employees to perpetrate misappropriation, inadequate access controls over automated records, including controls over and review of computer systems and even logs, attitudes and rationalizations, disregard for the need of monitoring or reducing the risk related to misappropriation of assets, disregard for internal control over misappropriation of assets by overriding the existing controls or by failing to take appropriate remedial action on known deficiencies in the internal control. Behavior indicating displeasure or dissatisfaction with the entity or its treatment of the employee. Changes in the behavior or lifestyle that may indicate assets have been misappropriated. Tolerance of petty theft. Why evaluation of fraud risk factors by auditor is necessary? The auditor shall evaluate whether one or more fraud risk factors are present. While fraud risk factors may not necessarily indicate the existence of fraud, they may have been present. They have often been present in circumstances where frauds have occurred and therefore may indicate risk of material misstatement due to fraud. The fact that fraud is usually concealed can make it difficult to detect. No doubt, the auditor may identify the fraud risk factors. Fraud risk factors cannot easily be ranked in order of importance. The significance of fraud risk factors varies widely. Some of these factors will be present in entities where specific conditions do not present ROMM. Accordingly, the determination of whether a fraud risk factor is present and whether it is to be considered in assessing the risk of material misstatement of the financial statements due to fraud requires the exercise of professional judgment. With this, I'm closing this podcast. The next podcast will begin from maintaining the professional skepticism. Thank you all. Have a nice day. I hope this is very, very, very useful in your preparation for your CA final exams. Thanks a lot. Bye. Don't forget to subscribe and follow.